Happy Monday, everybody. This will be an abbreviated presentation. Today is that the 18th? 618? Oh my gosh, 618. June 18th, 2018. Fibonacci number, 618. Anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! My name is McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange trading firm. We offer you direct access to the interbanking system. You can choose the account type, an ECN, a fixed spread or a variable spread account, or a combination of any. It's your way at Trader's Way with Trader Wayne. I do these sessions 7:30 in the morning, Monday through Friday, with the overriding goal of helping you put together trade plans, and more importantly, having the skills, patience, and discipline to put your own trade plans together so that you can be a successful and independently thinking currency trader that can not just survive these first few years of your trading, but thrive for many, many years to come. And this is a symbiotic relationship. We believe that we are investing into your success now, up front in our relationship, and on the long run, through loyalty and respect, perhaps, you will choose Trader's Way as your prime broker for your successful Forex trading business. Makes sense, right? I know, right? So, I am on the road. I am not at Harvard yet. I am in the beautiful kingdom of Orlando. So this will be an abbreviated webinar. Don't quite have the same setup. I only have one screen, believe it or not. But we should be able to go through. I should be able to answer your questions. I can do some basic setups. You can see I don't quite have the normal template, but we can get together, align our satellites, and if you have any burning, itchy questions, I'm here. I'm here for you, babe. Sound good? We'll do this maybe, let's say, about a half an hour. And then tomorrow, pretty much the same thing, probably with less technical issues. And then I'll be back home on Wednesday. Cool. So anyways, guys, thank you for your patience. Thank you for being you. Okay. Let's just start here. This is USD Mexican peso. Does anyone want me to cover this? Nope. Craig says, Mikey, yeah, nope, yeah. Yeah, so the reason the no's are expected is that generally this is a currency pair that I trade at the end of the month. Usually when I look at the calendar, if I'm staring at USD Mexican, so I'm looking at it on the 30th or the 31st, maybe the 1st of the month. That's because I do not use technical analysis, Sam I am. I do not use fundamentals analysis, Sam I am. On this currency pair, I use flow. It's a repatriation trade. So it's basically too early. Now, you may trade it technically and fundamentally. I typically do not. So, however, looking at the weekly pivot points, the USD Mexican peso has started in a sell zone. That's kind of where Monday started. If you go back to how Friday ended, Friday hit projected top of the week for the USD Mexican peso. And the interesting thing is, if you even go back to 1 week ago to Monday, Monday opened in a bullish area, and this red zone was the target. So on Monday you would have bought it. Friday you should have taken profit, and that's the whole thing. This zone is marked red with a full understanding. Anyone who is bullish should take profit. Doesn't mean they will, but they should, and you would have that in mind on Monday. You'd say to yourself, well, if I'm up there Thursday or Friday, that's where I would take my profit. And you can see the way that price action behaved on Friday. They did take profit. So we do know there were serious bulls in that market, and we know that they did use technical analysis and weekly pivot points to make their trading because they entered at the right place and they exited at the right place. And the way that Monday now has opened, it's opened in such a way that it looks like a majority of the bulls did not buy back in. Doesn't mean they're buying Mexican peso, they're just not buying the US dollar. So you kind of have a couple of choices. You can let it fall a bit further and buy it in this buy zone, a little bit lower than where we are now. The problem with that is it doesn't set up a trend, it sets up consolidation. If you look to the left, right, an old top, then an old bottom, an old bottom, then an old bottom, then an old bottom. And I'm thinking maybe we should call that a J-low. See, a J-low used to be a big wide bottom. Now it's just an old bottom. Old bottom, old bottom, old bottom, old bottom. Yeah. Right? Who's J-Lo? Shut up! Anyways, so you buy it there, but that only predicts back to the top. It's not really the trend. I wouldn't call that a swing. Okay, that's not a swing. But if you're a bear, this drop, this lower high, that would bring us all the way down here. So you just have to say, well, I want to get out of the reserve currency of the world while the central bank is raising interest rates, right? And instead of buying that currency, I'd rather buy Mexico. Like, come on, man. Right? Right? So, yeah, you can bearish. I don't know if you want to be, but you could be. Right? But it seems like it's been bullish for a while, so now is when you want to sell this. You could. Seems to me it should hit the 55, then head up, but the 55 predicts a double top. This is 4 hour now, guys. 4 hour then comes up, hits this, and then so even now I went from a 1 hour to a 4 hour. This is what it's predicted. The 4 hour chart says this. Okay, 55 in control, that says double top. Okay, we'll put it there. It's probably actually on this one, but we'll just put it there. Right? Double top means what? Potential reversal, but doesn't have to happen right away. You know what? I'll do it this way. Okay. That doesn't seem amazing, but what does that do? Well, if that occurred, that's the whole week I just planned out, by the way. Right? It drops a little further, then it rises up to do a double top, back down to slightly lower low, which then predicts a slightly lower high. Okay? Which you could boil it down to more sideways than anything, but a potential for a reversal. But then that reversal is set up closer to the end of the month. Okay. Well, Rob says set up for repatriation. Sort of. Here's the problem with that. We might actually believe it. Okay. Right? But here's the thing. You know, as Friedrich Nietzsche said, you know, perception creates reality. So you might see that and say, oh, well, it's the setup for the repatriation. But do you think that's actually true? Does the does the migrant worker sending $100 back to his wife and children in Mexico really give a damn about technical setup on the chart? No, the money's flowing, right? So if there happens to be a reversal at one moment, well, good, so be it. But the person in line at Western Union isn't staring at a chart, right? Yeah. So we gotta be careful. I mean, I as a trader, as a speculator, would love it to set up as as a repatriation trade, but really it's a coincidence. Okay. So, anyways, I think the way I have these charts set up, I have to change the currencies manually. Okay. Yeah, so in that case, John kind of says it in a different way, which also makes sense. Seems like the technicals could align with the flow, right? Sure, and that's what we prefer. I just don't want anyone to think like this is the central bank, Karsten's at the Central Bank of Mexico isn't, lining things up, flow trade, it's going to happen no matter what, right? 2.6 billion is going to change hands near the end of the month, regardless of anything. It's like when you're planning like GDP, for example, when you're not planning but calculating GDP, right? You can look at consumer spending and all the different things like the marginal propensity to consume and the marginal propensity to save and all these kinds of numbers, change, and you can try to calculate the C, and the C will change depending on market conditions or economic conditions, right? And I, which is investment, business spending, that can change based on interest rates, for example, which would be part of the natural business cycle, right? And then after I, what do you have? Government spending? Government spending is going to be government spending. If the government says 1 year in advance, we have a $3 trillion budget next year. Well, what if the economy speeds up? What if the economy slows down? What if there's a zombie apocalypse? Doesn't matter. They're going to spend the $3 trillion, probably even more. But they're going to spend it. It doesn't matter, right? And it's the same sort of thing. Like 2.6 billion will switch hands, and it will move from the United States of America to Mexico. Oh, Mexico! And it's going to happen, regardless of the technicals, the fundamentals, the zombie apocalypse. It doesn't matter, as long as Western Union is open. Okay. So pick a currency pair, any currency pair. Euro USD, Aussie USD. Might as well start with Euro. This Euro's on fire. This Euro's on fire. Yeah. All right. So here's to the not the end of quantitative easing. Amazing, right? Now, let's say you didn't trade this. That's fine. Look at some of the interesting things going on. Okay. That's pretty interesting. It seems to me, even though that was an amazing fundamental moment, it still reacted technically. It actually went up first, hit that line in the sand, the weekly R1, and then dropped like a ton of bricks with two hammers on it, right? And check this out. There's a little wiggly wobbly around it, but I think we can agree that there seems to be some sort of relationship between the bottom of my green zone, the top of the green zone, and what actually happened. I think it's kind of interesting. Talk about the fundamentals lining up with technicals. There you go. Okay. So if you're a bull, what? Okay. Okay. Not this price, not that price, not that price, not this price, not that price, not that price. Only this price, and look. Crazy. Now, if you're a seller, you want to sell up in here. Okay. If you're using price action, what you should do is look left, get across. Okay. That would be your sell. So let me change this now, if it'll allow me. Please, sir. All right. Okay. Now, if you were using pivot points and you wanted this to fall, what pivot point would you want? WM3, and that happens to be this gray zone. Weekly M3 is right here. This euro's on fire. This euro's on fire. Okay. An amazing coincidence, don't you think? I just kind of look at it as range bound, I think. I think the dollar got a little too strong here. I think the euro deserves to be weak. As you recall, they changed their policy, which I predicted in advance by saying that they would do less for longer, and I couldn't help laughing at that idea. And then they came out and they said, no, we're not going to end tapering. We're just going to do less quantitative easing and we'll extend that schedule. I'm like, oh my God, that is less for longer. So they're printing, no, I shouldn't say that, printing. They are buying $15 billion in European bonds in October, November, December, which were not priced in the previous policy. And then as I explained on Friday, no, I guess it was Thursday of last week, then I explained how that would impact money supply through the fractional reserve banking system using the formula 1 over RE. And I showed how through the fractional banking system, the additional $45 billion, once it has been deposited, lent out, deposited, lent out, deposited, and lent out, will actually increase the European or the euro money supply by 450 billion euros. And then I drew out a chart showing the supply and demand curves, right, for the loanable funds market, to be specific. And we shifted to the right the money supply curve because it wasn't moving along the curve. The change in policy was a shift in the curve. So we shifted that out right, and then we looked at how that would impact the value or the price or the purchasing power of that euro. And I showed using the supply and demand curves how that would lower the value of the euro. And in the course of the 12 hours after I did all that for you, the euro plummeted to about, what is this, 12 hours? Plummeted very significantly. It fell from, I can't even see that, what is it, 118 down to 116? 115.50? Yeah. Cool though, right? So now, I have a little, bug in the back of my head saying, you know, we're gonna start to consolidate soon for the summer and for the World Cup, right? You have to trade without the Europeans. Europeans don't work in August. That's just a fact. I think it's law, right? I don't know. Europeans are incapable of working in the month of August. It's just against the nature of being European. And then with the World Cup happening in essentially July, that takes July offline as well. So maybe this is a big hurt, a big sideways for a while. I'm okay with that as long as I know, right? As long as I know in advance. So that's kind of what I'm putting together mentally. I don't know if that's correct though, but this looks like a bottom. That was the predicted bottom from last week, and now we're at that very, very, very thin line is actually a buying line. And I discussed that on Friday with my swing trading group, that this was a buy if you wanted to buy this euro. And if you think this is sideways, like if you are into this being resistance and this is into support and you're thinking like we might just be in this giant sideways action, if you're into that, you could delete your 20 and 55 EMAs because they represent the market. And if the market is moving sideways, then by definition there is no. So then you don't need those. They're in the way. They're noise. And you can just say, well, you know, 5A cross up at support, 5A cross down at resistance, and you wait for August. Right? And then the third week of August, I'm going to restart swing trading group. So hopefully everyone signed up that needed the summer school. Okay? Has anyone started summer school yet? If you do that, make sure you start with basic training first. Don't just jump into like the advanced stuff like, oh, I want the swing trading stuff. Start with basic trading, the basic training program, and then I would recommend doing like price action, and then roll into, let's say, swing trading. But then, you know, the fundamentals course I think is fascinating. So, but you know, these things take a lot of time, and that's why over the next 3 months you should be spending a lot of time doing those courses. Okay. Aussie dollar was another one. Okay, hang on. Okay. Blew through the weeklies. I don't have monthlies on here. This goes on. This goes on. Okay. So these are monthly pivots. Played perfectly off the monthly, went up to the resistance, almost got to the M4. Collapse, lower low, lower high, lower low, lower high, lower low, lower high. And then with the wimpiness of the euro, Europeans moved their money from Europe into the United States. The US dollar got strong, and anything relative to that looks weak. Also, the rising central bank rate in America, since the Fed manages the interest rates for the reserve currency of the world, the higher borrowing costs of third world nations in particular go up, but income levels don't seem to move up at the same rate. Okay. Another way of looking at it is, I see it as the United States exportation to other countries. But anyways, there are a lot of smaller economies in Asia that are going to get hurt by the higher interest rates in the United States, and that eventually they'll need to raise their interest rates, but they'll end up doing it slower than the U.S. And maybe in that case, maybe the U.S. dollar does catch a bid, so to speak, turns into a carry trade, since the interest rates are so high here now. I mean, we went from zero, but now we're so high to other developed economies that maybe it becomes a carry trade, which is sort of not really wanted, but maybe part of the laws of nature of finance, where the economy gets too hot, so the Fed is forced to raise interest rates, and if the currency becomes a carry trade, then eventually the value of the dollar gets strong relative to other foreign currencies. It slows down our exports and eventually slows down the economy, which is another way of, instead of raising interest rates, it ends up doing the same thing. If our exports become too expensive relative to the other currencies, then those foreigners find substitutes, or they simply do not do the buying. And that would slow our economy down, which is the same as raising interest rates, which actually just makes borrowing costs higher, which on the long run should slow down the economy. So one way or the other, it should slow down our economy. But then what I think you'll see, so now I'm talking 3 years from now, I think you'll see like the Fed kind of top out on its interest rates, and the other Asian countries will slowly raise interest rates, but probably won't stop. So you'll get like Australia should be raising interest rates right now, and they're basically telling us they will raise interest rates in September, October. Okay, so you have Australia raising slowly, but I think even after the Fed stops, they'll keep raising interest rates, and it'll go beyond. But what about like Indonesia, Malaysia, Vietnam, right? The Thai baht. I think those economies, could suddenly get very high interest rates. But 3, 4, 5 years from now, right? So let's say so I was predicting that GDP in the second quarter is going to be higher than 4% in the United States. I think it'd be like 4.25%, 4.5%. I think it's going to be huge, like redonkulous, right? So let's it's unsustainable, but I think it'll happen just because the other GDP quarters have been so poor, right? So anyway, so we'll have this big growth, but let's say we sustained 4% growth. Then what would you think the natural interest rate would be in the United States to maintain, economists call, Y at Y bar, long-term growth at potential growth? What would that secret sort of special magic interest rate be? Would it be 5%? Would it be 5.25%? So if that's true, and when we get to 5.25%, let's say, then what's interest rates going to be in Australia? 7.5%. And if it's 7.5% in Australia, what's it going to be in Indonesia or Malaysia? Malaysia disclosed it yesterday. They're like, yeah, you know how we told you we had a $60 billion deficit? Well, we were a little wrong. It was $260 billion. And the whole market went, what? what? But there you go. That's why frontier market's so exciting, right? They're like, yeah, you know that whole debt thing, the whole bond issue thing, and the whole interest rate thing we were telling you about? Yeah, we kind of lied about all that. Thank you for your money. Yeah, we kind of lied to you, like not just a little lie, but kind of like a ginormous lie. Yeah, right. Right? We missed a few zeros, but individually, it's nothing, right? So I don't know. So, anyways, I think it was Malaysia just got crushed yesterday because they just admitted that they were off by about 300% on what their debt was, but they didn't tell anyone until they collected money from bondholders. But welcome to the wild, wild east. So top, bottom. So yeah. So with Aussie, it's coming down. But I look at this and I see dollar, U.S. dollar, not as much as I see Aussie. But remember, we talked about this last week where I said somewhere between now and September, I think you might want to consider perhaps cornering the market on Aussie dollar. It might start going up, and then if it does start going up, it'll probably continue to go up for many years. Okay? Now, every trade plan should have a devil's advocate to it, right? And a trade war between the United States and China would not be good. That would slow both the U.S., well, it would increase the inflation levels in the United States. And it would also slow the economy down, both here and in China. If China has an economy that slows down, that's because there would be less, let's say, new orders coming in for their factories. Capacity utilization rates of factories in China would slow. Consumption of energy would slow. Consumption of commodities and raw material would slow. And China would import less ore and coal from Australia because coal is used to fire their electrical plants to make electricity. But also, when you smelt iron ore into a liquid, so now you have liquid iron, and you sprinkle some coal on top, otherwise known as carbon, when it cools, it's a much stronger material than just iron, and it weathers the atmosphere a lot better. And we call this new material, we call it steel. So if China needs less steel, if China needs less coal for electricity, so on and so forth, then demand would fall for Australian products, and therefore demand for their currency would fall, and the value of the Aussie would be diminished. The opposite. So we need to pay attention to the rhetoric between Xi and Trump. I think they announced July 6th another $100 billion in tariffs. So let's respond by saying, okay, we're going to buy less wheat, we're going to buy less soybeans, right? But the interesting thing about China is they can retaliate not just economically, but they laser target their tariffs. So they'll say, okay, Trump ran on a political platform of helping the coal industry. Okay, good. We're going to slap tariffs on the coal industry. We will buy less coal. Huh. Do you think that was politically motivated? Yeah. How about Mitch McConnell from Kentucky? The Chinese are slapping import taxes on bourbon. I mean, now they're going after individuals in the U.S. government. Stuff like that, like laser target. We'll throw a tariff on something, and they have no idea what they're doing. And the response is like they're going after very specific politicians with very targeted taxes and stuff. Pretty smart. Oh yeah, Charles Binder says, the Airbender says, yeah, a lot of Chinese won't be happy. I'm just saying it's funny. It's, well, and smart. Yeah, well, but here's the thing to everyone, to John and Charles specifically. Trade wars being pissing matches, right? Where nobody really wins, especially if especially if your shoes are wet, right? Like no one really wins these things. The point of view I would imagine from Trump that we gave a very, very favorable trade terms to Canada and Mexico when we created NAFTA, because at that time it was needed. And we gave good trade terms of trade to China back in the 70s and the 80s and 90s because it was cheaper than going to war and changing, communist China into capitalist China. Oh, so you give them unbelievably awesome trade terms, and sure enough, 20, 30 years goes by and we won the war. Yay! Right? They're capitalists now. Great. And by the way, I don't really care about the political system. I don't care what your government is. The most important thing is it's capitalist. That your economy is a capitalist-based economy. So, I haven't seen where a list or some other form of let's say governance really matters. But capitalism, in no matter what form of government, so you can be communist and capitalist, and it'll be great. You could be democratic and capitalist, and it's great. You can be sort of more socialist like Europe and Canada. As long as you're capitalist, it's great. You get rid of capitalism, I don't really care what form of government you have, it's going to be a good one. The key to everything is entrepreneurial, and I believe that's what capitalism is, but we don't need to get on that today. Okay, let's do one more and then we'll call it a day. We're just going to switch it up. I'm going to do pound yen. People like pound yen. Okay. I'm going to switch this back to weekly. I think a lot of people would argue this is heading down. I think headed down. This low would be lower than, if it happened in the first 72 hours, you could get a counter trend trade. More likely, I think what it would do is somehow set up, and I think, in the back of my mind, I think we would do this, which means more risk off, continued bad news out of Great Britain, and continued risk off mood, probably due to rhetoric between Trump and Xi on trade, and pound yen has a higher propensity to fall than rise. The only argument to that is that this doesn't actually make a lower low, which means if it's going to go up in at least range bound, it kind of needs to do it today. And then from there, we would have to analyze why it did this. Okay, but it feels more down than up to me in the moment. But that's why we use analysis. Okay. So we need a little more time. It's a terrible place to sell. It's a potential place to buy. I feel like it's already gone a little bit too low. So now you got to drop into a smaller time frame. You kind of have to zoom in a little bit. And it doesn't look like it's respecting these pivots. Well, this one is pretty close, right? Yeah, this one is. So if it's going to go up, it has to do it now. Even then, it's an S1, R1 inside week. Cool. So we'll see how it shapes up between now and tomorrow. Thank you for being patient with me while I'm on the road with my family. All right. Oh, hey, Mickey. Have you been watching me do this webinar the whole time? Sure have. Wow, do you like to trade? Well, I like Forex. Oh, wow, Mickey, I had no idea. Gee whiz. Wow, we have some fans here, so that's great. So I need to go. Princesses are waiting. So peace on earth. May the pips be with you. May your profits be above average, and I'll see you in the morning. Once again, thanks for being patient with me while I travel. Also, thank you very much for being a client of TradersWay. And if you have yet to join the family, please visit TradersWay.com and open an account. Give us an opportunity to earn your loyalty and your respect. Thank you, everyone. I'll see you tomorrow.